Hi, I'm Ashleigh Patterson from Momentum Wealth. I'm a finance broker here, and today I'll be talking about the Royal Commission into the misconduct of the banking sector and how that impacts investors. So over the last few years we've seen a number of changes with APRA bringing in their caps to curb investor lending, really to slow down the Sydney and Melbourne markets, but it was brought in as an Australia-wide policy. They've put caps on interest-only loans and also investment loans. Now from the 1st of July, APRA think their job has been done, so they're scrapping their measures. However, the Royal Commission into the misconduct of banks will be taking over from where they left off, and this has been brought about to look at what the banks have been doing over the last few years and to review some of the misconduct that may have been brought about during this period. So this is probably going to have a large impact on investors and the lending that they can have in the future. So there's talks that the Royal Commission will actually impact serviceability by a further 30%. So this may mean households will have a total drop of about 50% of what they could actually borrow a few years ago. And it does vary a lot between banks. One of my clients at Bank A, for example, can borrow about $400,000, but at Bank B they can borrow $550,000. So it's really important to approach a broker who can actually tell you the difference between these two banks and where you do fit in. There's also talks that the housing expenditure models will tighten. So this is how banks look at how much people are spending. There's been a large crackdown on this, and there will continue to be so. And also interest-only loans, the rollover of interest-only loans. In the media there's been talks that this is going to have a large impact to the wider market as people finish their 5-year interest-only terms and can no longer roll over their interest-only loans. They have to roll over to P&I. So that means that a lot of people will find that they can't actually reapply for their loans and get that extra interest-only period. They'll have to roll over to P&I, which may have a large impact for cash flow for those people. So investors really do need to prepare for this by putting plans in place now before the anticipated drop in borrowing capacity potentially occurs due to the Royal Commission. It's also a really good time to review current rates, because what once may have been applicable might not longer be suitable for that particular investor. So it is really, really important to talk to your broker about this and to make sure you're checking out your interest-only loans prior to the expiry and prior to the rollover, so that you're really ensuring you're in the best situation possible moving forward.